I'm going to go into detail on a trade on how you can make easily 3 to 1 as long as you're patient and you wait for the setup. The setup always presents itself, but it takes time to present itself, but it's so easy to recognize. And I'm going to show you by example on a trade I took on Amazon here, and I'm going to go into detail. So make sure you take your time, take notes, and watch this. And don't worry, we're going to have a case study that you can download below, so that way you can have all the notes in front of you and you can take this trade, put it on a wall, and learn from it and trade it the next time you see it. Let's get in. So the trade I'm going to be talking about is Amazon, and here is the actual trade itself. I actually shorted it and then shorted some more on the backside and covered at the end of the day. But I'm going to explain why I took this trade, why I was confident to hold through this push, and how I was able to add to the trade and why I added it where I did. So this is going to be very detailed, and I want you to know, take your time, take your notes, and don't forget to print out the case study below so that way you can actually have the details of the trade so you can take this home with you and learn. If we zoom in here on the daily, we have a key support level that was broken. And if we go in the hourly, it's going to be easier to see. You can see that I need to go to the hourly to adjust the actual risk level. Now, with that being said, this is a key area that has been tested 1, 2, 3 times before in the past. And you can see that easily right here, right? You see that one time, and then you see number 2, and then you see number 3. You see these areas that have been tested. Each have been tested at some point. That is something I'm looking for. I want to see an area that has been tested so that way I have confidence in that being a key level that is going to be a trigger for me that I want to be short. It doesn't mean I'm going to short right away. There's some cases I will, but in this case I did not, and I'm going to explain why here in a second. I want to take this time to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. So we have this line here that I drew. Once we zoom in here, this is the day that I actually ended up taking the short on this day. We're gonna put that line there so that we don't lose this day. But I want you guys to understand, as I mentioned, just because it breaks doesn't mean I want to short right away. And we're gonna go ahead and zoom in now on the 5-minute chart on this day, which is right here. Here's what I'm thinking. Right when it breaks this level, I want to see what happened before. And pre-market, we actually had a little pop and then just a complete meltdown. Now, when that happens, when something just completely melts down, like if we just get a pop and then melt, I need to see a bounce. I need to see a bounce. Stocks don't just go straight down. Sometimes it's rare they do, but in most cases we get bounces. So I'm not going to just short something that goes straight down on this crack, because if I short anywhere right here, then what that means is I have to be risking minimum right here, but I end up risking this area. And if you're probably wondering, well, if you're risking that area, why didn't you stop out up here? I'm going to explain in detail why I didn't. So stay tuned with that. Here's the thing. Whenever I'm seeing this break down, I want to see a bounce, because I don't want to have a wide risk reward. Because if we bounce right here, I have to assume that this level right here is going to hold. That's how I trade, because every time I assume that it's going to break, I end up taking big losses, when I should say is just normal losses. And they're big to me in my head, because who likes losing, right? No one does. Instead, I want to assume that that's going to hold, so that way I can at least take my 3 to 1 risk reward profits in that area. And then if it breaks, I'm in a really sweet position. In this case, whenever we get this drop and then we start to pop, I'm thinking, okay, wherever I get in, I need to make sure the risk reward is there. I need to make sure that if I'm going to get in, I need profits to be at this area to be at least 3 to 1. So if that's the case, what I want to be able to do is be like, okay, what are the key areas in this chart? This is a key area from the prior day, because in the prior day, we had a tank with no real bounce until the end of the day, and we had a nice bounce up to this level. And then of course we have the prior highs. Here's where it gets tricky. You're probably thinking, well, where do you risk? Where do you stop out? and so forth. And why did you say that you risk here, but you stopped out? You didn't stop out, right? I didn't. And I'm gonna explain that because every stock is different. If you're trading small caps, you usually give things like some range, right? Like things don't hold key levels to a T. There's rare occasions, mostly in OTCs, where they hold the lines to a T. And if they do, in that case, you do want to risk very tight. But in most cases, I have found that you want to give it some room to breathe. Give it some room to dictate where it's going to go once it touches and tests the level. That's what I'm trying to do here, especially on a $100 stock. Whenever I end up getting in, I end up taking an initial position right here at 113.50, and I end up wanting to risk around this level, and I know that I want to take profits down to this level, so that's like 2.5 to 1. If that's the case, that's not the best, right? It's not the best, but it's not terrible. At least I'm getting in a starter. I'm getting half size at 2.5 to 1. I'm happy with that. You do what you want to do. However, I know if this touches up to this level, which is the main level I'm using, this 114.70s, I want to give it some room. Now, if this was a $1.40 stock, let's say it was a $4.70 stock, giving it 10 cents is not a big deal, right? Giving it 10 cents for it to test this area is not a big deal because I could easily see if this was a $4.70 stock, I could easily see it pop and then drop, and it could be 10 cents. On a $100 stock, that is a little different. That's a dollar range. I want to give it some range. So I'm going to give it to a 115.50. So I almost got stopped out here. And that's just because I've learned through trading Amazon, through trading Tesla, that if I give it too tight, I'm going to get wigged out over and over again. So that's why I didn't get stopped out on this trade. And that's why when I sized in half, I could give it room, because if I got stopped out there, I'll be okay, right? This is where risk management is super important. And this is where I think people don't really go into their trades in depth and explain how they're handling risk. And this is what I mean by you got to handle risk and understand where could the stock go? Where would I get out and be uncomfortable? Where would I get out and be upset if it ended up tanking way later? Have all those questions answered, then you can kind of gauge where you want to size in and where you want risk management to be. If you're curious, by the way, what this is TradingView. It's my new platform. I love this platform because look, I can explain the trade very easily. You can put out your risk reward here on the chart. So if you're curious about this, check out the link below. It does help me out a bit, so I appreciate it, but you're gonna get a badass software. So here's what I wanna show you though. The reason I didn't go full size right away is because here's what I noticed. Let's go ahead and get rid of some of this stuff so you can see. What I noticed was this, and I'm sure you noticed it too. There was a beautiful trend that formed, and this trend formed after I got in here. I got in on this push right here, and when I got in on this push and then it failed, ideally it would be nice if it held this line and just tanked. Great. But we held this area and it formed a nice uptrend line. So I can't ignore that. It has 3 touches. A trend line that has 3 touches to me is a very, very important trend line. So I need to respect that.
Put some respect on my name.
So in this case, whenever it pops up here, I'm not adding full size. Ideally, I'd love to add full size if this wasn't a trend line, but because it is, there's some bullish signs here and I can't ignore it. Even though the big picture is on my side, I cannot ignore it because when I ignore it, I end up taking losses. So when it cracks this level, I end up taking some more on a pop here, as you saw earlier when it popped back up to this level. The reason I didn't take it right away when it cracked this level is because I wanted to give it time to test and show me that it could crack this line here. Because if it could crack this line here, in that case, I would be like, okay, we're on the backside again. And that's what happened. As you can see on the trade, it cracked that line, popped back up, and I'm getting in short. Here's the thing though, I could have easily missed it and it could have easily just cracked and went all the way down. And that's the risk. And that I think is the hardest part of trading for me, is understanding that if you're going to short on pops, if you're going to long on drops, that's really hard because that just says that you could miss the play. Because if it doesn't drop and you're trying to go long and it keeps going higher, you miss it. If it doesn't pop and you're trying to short and it just keeps tanking, you miss it. That's the battle that we face every day. Conquer that. So that way you can take advantage of plays like this. So even if this didn't even go to my price target, but it still ended up being a good trade. I still had good risk reward. I was patient and it ended up working out in my favor. This is what I want you to see. If you have any questions at all, comment below, and don't forget, check out the link below at TradingView. It's a great software. I love it. I'm now using this instead of Thinkorswim just because it's user friendly and it looks beautiful. And again, thank you so much for watching the show. Make sure to subscribe. Take care.